I'm Sam Wong, and I've done 5 startups with 3 exits. I also wrote a book on startup execution. This is the last in a series of 6 videos on raising pre-seed and seed startup funds. We're going to talk about negotiating funding terms, the importance of fundability, and how our training helps founders like you build a fundable startup. Since this video is from a live webinar, we also include the full question and answer session with over 230 startup founders. The 5th step is to close an opportunity. You need to negotiate and provide proof that your startup is a worthwhile investment. A key element of this is going to be the term sheet. There are 3 categories of terms on a term sheet, about 28 or so typical terms in a term sheet. There's economics. There are terms that affect the control of the company, and then just other miscellaneous things. As a founder, it would help you to learn the terms so that you can know what to negotiate for and why the investors will ask for something. In fact, we cover a good amount of startup terms and investor fundraising in our class, because we want you to be well informed. We have a startup attorney, Matt Rossetti, who refers us a lot of prospective clients, because clients go to him to ask a lot of questions, and he has a high billing rate. Most attorneys, specialized attorneys, do, but he points a lot of his potential clients to us to learn first, to save them money. Okay, the one-time cost of our training usually saves the founder a good amount of money versus their paying a billable attorney by the 10th of an hour to be able to answer those questions. Okay, in order to negotiate, you need to be able to have leverage. You don't want to just insist on certain terms and conditions. You want to create a very fundable company that is very, very popular. There's lots of investors who want to get a piece of the investment so that you can use that to your advantage. And again, we talked about before, due diligence. You need to be continuously ready for it, because due diligence is a key part of that negotiating and closing process. Which leads us to the summary. Okay, I've talked a lot, and I apologize because this is just so much content to help a founder do things the right way. You need to focus on fundability, not on fundraising. Again, the benefits of being fundable: okay, faster, easier fundraise, higher valuation, and better terms. Okay, well, if you're not fundable, you'll usually have a worse time with all of this. Remember the guy who said he spent 10,000 hours trying to fundraise and just couldn't get it done. The process to raise pre-seed and seed funds: prepare, plan, execute, sell, and then close. This is hard work. It is not a cakewalk. Just a simple, hey, change those words on the pitch deck is not going to get it done. All right. Okay. Don't take shortcuts on the hard work. If you need to get it in shape, you need to work out and eat right. Okay. It's putting in a lot of hard work. Taking a diet pill is not going to build that muscle strength that you're going to need when you're doing battle with a potential investor. Okay. To that end, we have a set of startup training offers. And you may ask, why did we do this? Okay, I was a first-time CEO of startup number 4, and I had ran into all sorts of problems. And I tried to get help, but what I ended up finding was that there's very little structured and organized help out there. We put together a structured journey around the startup roadmap and the blueprint that I mentioned earlier. Random bits of best practices usually don't work well. Okay. We also have lots of experience as a seasoned operator. Okay. As I mentioned before, we've done 5 startups with 3 exits. I've worked as an advisor for a number of different accelerators. I also come with a management consulting background and big corporate background as well. I've done both business and technical. I've been a 4-time technical VP or CTO. I've also been a CEO 1 time. So I have the background with both acquisitions, successes, and with failures. So I'm not a big fan of people who got lucky, captured lightning in a bottle 1 time, because one success usually doesn't mean that they are great company builders nor great coaches of founders. We also go deep in our content. We don't like the 1-minute tips, because if you could build a startup with a dozen 1-minute tips, then everybody would be rich. Okay. And startups would almost always succeed. That doesn't happen. The problems are hard, which is why you need to go deep. We also try to go visual with our content because we realize that, slides that read like the dictionary or slides that just tell you something obvious aren't all that helpful. Okay. We also include templates to help you build out and implement the best practices that we advocate and cover in our training. Many other startup training classes don't have any of that. So we have 4 tiers of our startup training: basic, which is no cost free content, a lot of free content for founders to get started with. Then we have low cost content. If you're at the very early stages and maybe haven't even started your company yet, you can dabble with our starter tier. Once you've decided, yeah, you want to be able to seriously do a startup, we have our pro tier, which is affordable content to at least build a strong foundation. Then finally, we have our premium tier, which is high value content for proven scaling if you really want to grow it. Okay, so these 4 tiers, as I mentioned, from basic all the way to premium, that's our cost. We have lots of various services. The more costly, the pro and premium gives you more access to more training as well as coaching. Our basic tier gives you the 5 classes down at the bottom. Okay. Our starter training tier goes up to about 13 classes. And then the pro tier is around 18 classes, and premium gets you everything. Notice that the starter, pro, and premium have different amounts of different portions of the core training classes, which are the key classes at the top of the slide. We also bundle coaching with our training. So you can observe or you can present as in our coaching sessions. So as you get to the pro and premium, we include the right to be able to present multiple times in our group coaching, as well as including one-on-one coaching. We really want to earn your trust, which is why we have a lot of webinars that describe various aspects of the startup journey. Okay. And we know that many founders want skilled coaching. Since I've put in so much time as a professional here, we bill my time, one-on-one coaching with me at $4.75 an hour. You can also get coaching with me in our premium bundle or in our coaching packs. Okay. If you're looking for something a little bit more cost effective, you can start with our group coaching. This is a QR code that you can scan. Basically, whether you've bought anything from us or not, there's a $95 fee just to get a ticket for a group coaching session. We have a max of 4 presenters in a group coaching session. If only one person shows up for a group coaching office hours, then you basically got an 80% discount on my billing rate. Okay. So we have lots of founders who've raved about our coaching and training. We're particularly proud of this founder who said the content we provided in that particular class was the most efficient breakdown of a complex topic he's ever seen in all his fumbling around with different startup content. And if you compare what we do and our cost to attorneys, the typical startup partner, the partner at a startup law firm, will charge between $600 to $650 an hour. So for less than an hour and a quarter, you can get either a starter or a pro pack. And for about 6 hours of your time with your attorney, you can get our premium pack. But that premium pack includes 6 hours of coaching with me. The attorney will usually focus on just a handful of things focused around legal. Our content, coaching and training, focuses on a lot more. Okay, we cover some of the legal stuff as well, even though we're not an attorney. We do actually have a lot of attorneys who attend our training to learn. So we teach attorneys, even though we're not attorneys ourselves. Okay, so the benefit here is that you can get access to our training without having to constantly watch the clock like you would with your typical attorney. So on our website, fundablestartups.com, on the solutions tab, you'll see this quick summary of the training offers. I apologize, we went a little bit over, but our goal here is to really help founders, and your patronage will help us create more content. We really prefer to train and teach. That's what I enjoy. Okay, I enjoy doing the teaching. I enjoy doing the training, but I have to spend a lot of time marketing because, just to get the word out. Anything you can do to help us will allow us to do what we enjoy, which is teach and train. All right, so we'll take questions now. Okay.
Awesome. We've had a lot of different questions come in. We'll be on as long as people are willing. I know it's already past the top of the hour, but we do have a handful of questions. The first question came from a while back, but Someone asked, what's the difference, advantages, disadvantages between a Delaware corporation and a California corporation?
Yeah. So the key reason that I mentioned Delaware C Corporation is that Delaware is the default because it has a very well built out business legal infrastructure with lots of existing case law. If it's happened in a business, there's chances are there's a settled case in Delaware that addresses that particular issue. So every professional VC, if you're not a Delaware C corporation, they will ask you to become a Delaware C corporation before they write you a $2 or $3 million check or a $10 million check. Okay. So that's the main reason is the business infrastructure and the fact that there's established case law going back going back decades. Okay.
We had a question coming from Alex, who asked, what's the typical time frame or timeline for how long it would take to raise capital, to raise fundraising, to raise funds?
So that all depends on how fundable you are. We have seen a very fundable company go off and start their fundraise in earnest and get it done and closed in 6 weeks. Okay. Then you have the other extreme with that one guy on Quora who for 5 years was trying to fundraise and couldn't get anything done. But let's say you're moderately fundable. The average time frame, depending on how much you want to raise, can be anywhere from 4 to 12 months. I'd say with a sweet spot of between 6 and 9. Okay. And again, it depends on how much you're trying to raise and how fundable you are. Okay.
Makes sense. We had a question coming from Guyan who asked, how much funding have you raised before, Sam?
Oh gosh. Probably in the low 8 figures, I would imagine, in terms of helping startups to be able to raise. I don't focus that much on actually the fundraising process itself, because my job is to get you to get fundable so you can fundraise. Okay. A lot of people will ask me, do I know investors and can I make introductions? And the answer is yes, I do know a decent number of investors. I don't advertise a massive Rolodex. There are some people in the Silicon Valley where you convince that one person, just a phone call from that one person will get you $1 million. That's not me, okay? But my goal really is to help you get fundable. I only do the intros to investors if I have confidence that you are fundable. Because given what I do as a startup coach, if I introduce founders to, if I introduce an unfundable company to an investor, that reflects poorly on me. Okay, so I have not really been the mechanical fundraising person, but I've gone through it multiple times, and probably low 8 figures. Which there's lots of people out there who've raised more. But my goal is, if we do our job right, you can do this and be successful. We're happy to help coach and provide feedback along the way, but we're not hanging our hat on the fact that we have this massive Rolodex. Literally, there's a couple of people in the Silicon Valley, a single phone call from them said, hey, I think you should invest. You're going to get $1 million just because that guy made a phone call.
Awesome. We had a question come in earlier from Ben, who asked, can you explain the difference between a startup and a small business, and the differences between a software and a hardware and a service company?
Okay. So multi-part question. Small business versus startup. A startup really focuses on hyper growth. And in order to reach that hyper growth and scale, it usually means a large amount of outside funds, which usually means venture capital. Okay. A small business might still get outside capital, but the growth expectations are different. The typical investor who invests in a small business might be happy with 2x, 3x return. Most VCs are going to look for 10 to 100x returns. Okay, so there's a different expectation and there's a different amount of pressure as well. And in some cases, the small businesses, you can build a very good business that doesn't go 10x or 20x 5x is not bad. Okay, it can give a very good lifestyle to have a 5x small business. So that's really the main difference is the amount of growth expectations, and that growth expectations affects your investment expectation. That investment expectation affects how you form, whether you should be an LLC or a C corporation, and whether it's okay to stay a California LLC, for example. My company, Fundable Startups, is a California-based LLC because we are not built to do the rocket ship scaling, which is why we did not do the Delaware C corporation thing.
And the hardware,
the hardware side. Okay.
Software service.
Yeah, so hardware versus software. So let's break that down first. It kind of comes down to revenue model, okay, and cost to be able to build and develop. Most hardware companies take a much longer time to be able to build out their product. There's a very structured prototyping, process. You have to find a manufacturer, then there are QA issues and supply chain issues and all that stuff. So the product development cycle tends to be much, much longer. It is literally possible for you, if you happen to be a great coder, you could whip out an app in less than a month and put it up on the App Store, and in 6 weeks start getting downloads and maybe even people buying your app. Okay, so the cycle time for product development is different, which also means your how you price your product is different. Okay, so pricing the product ultimately, and this comes down to execution-based stuff. So I'm going to get into some execution things. The price you charge, you should deliver a certain amount of value. The price you charge should be lower than the value, which gives the buyer a reason to buy. That difference between the value they receive and the payment that they pay is the buying trigger. That price you charge and your cost to build the product, that's your profit margin. So you need to take this all into consideration. As I mentioned, hardware companies have oftentimes higher development costs, longer timeframes, et cetera. So that affects your pricing model, which is one of the reasons why, of course, you have fewer companies doing a recurring revenue on hardware, et cetera, et cetera. It's just lots. The recurring revenue on software effectively is a software as a service SaaS company. Okay, so hopefully that provides a bit of perspective.
Hopefully that answered any questions. We had Sandra who asked, do you have any recommendations for term sheets and other startup regulations for Canadian-based businesses?
I am not a Canadian business formation expert by any stretch of the imagination. I'm not even an attorney, as I mentioned earlier. So I don't really have any specific detail there. I do understand that Canada has the equivalent of a C corporation as well. If you only are looking for funding in Canada, that might be acceptable. If you're looking to raise funds from somebody in the US, oftentimes they will ask you to form a US-based Delaware corporation as an entity as well. In terms of, there's another part of that question I'm not sure I answered. Derek, what's the other part of that question?
Recommendations and term sheets.
Oh, recommendation on term sheets. Well, I don't know if the term sheets are that different, really, because many companies investors will start with the NVCA model term sheet. The National Venture Capital Association has a template term sheet with a template agreement, which many startup attorneys will start from that and modify. So I think the terms are fairly similar as well, but you should really consult an attorney in your space. Okay.
Awesome. There's a question coming from William, who asked, is having a nose to sell equal or better than experience?
That's a good question. Honestly, it certainly doesn't hurt if you have the inclination to sell. Some people think, like I falsely used to think, if you can talk, you're a better salesperson. I actually grew up kind of introverted, okay? And I had to, through training, learn how. I was uncomfortable in crowds, and I still am kind of. But what I do care about is helping people, Okay. At one point I wanted to be a teacher. Then I actually volunteered in a school. I was like, oh, this is hard. It's really hard. But in terms of selling, it's something that is learnable. Okay. Way back when before I got married, my roommate was a sales guy, and he pointed me to the book that's on this slide, the conceptual selling book. I read it. It's actually a very good book. And for me, I worked in enterprise. So most of my sales was in the enterprise space. This was a perfect book for me in the enterprise space. It's generally considered that if you're going to sell in the enterprise, this is the book to be able to do. The other method that I showed earlier, the Sandler system, that's generally not regarded as the best tool to be able to sell into the enterprise. But what I'm saying is that selling is something you can learn because it is based on a well understood process. If it's a process, processes can be taught. And that's what happened with me. I learned how to overcome being an introvert and how to be able to sell. I've actually sold a lot more. I've probably sold 9 figures worth of deals in my days as in enterprise sales, even though I'm an introvert. It's something that I do believe can be learned.
Great. We had a question come in from Sean, who asked, can the premium tier be broken up into multiple payments? And is that going to be per company or per founder?
Yeah, we don't break up our training into multiple payments. We used to do that. What we found is that too many founders or too many credit cards stopped working on month 2 or month 3. Okay, so breaking up the payment just wasn't working out for us. We usually do this per founder. Okay, but if you have multiple founders and you both want access to the deal, talk to us and we'll work something out with you. Okay.
Awesome. Other questions. We have Suresh, who's been raising his virtual hand for a while. Suresh,
Hi, I hope you can hear me.
Yes.
Hello.
Yes, we can hear you.
Okay, all right. I'm sorry, I can't use my video right now.
Okay.
So we have a B2B marketplace. This is for car rental services all over India. It's a highly disorganized market. We're trying to organize it for the first time. We already launched the product. It was a software product which was in development for 1.5 years.
Mm-hmm.
We are still bootstrapped. At what stage do you think we should look for funding? Because this, I mean, we are putting in almost 12 to 14 hours a day, or the founder, co-founder, and the team. And going for funding is, as you are saying, there's so many different tasks to be done.
Mm-hmm.
People to be hired, and
Mm-hmm.
stuff like that. Of course, we do need funding to really go big. So, is it a good idea to take some time away from the business to grow the, I mean, chase after the funding? So,
Yeah. So oftentimes I get founders who ask me a specific question about their situation. I do not like answering specific questions without getting specific data and detail. Okay. So I've run into lots of people who say, oh, definitely do this after 5 minutes. Oftentimes, if you have a hard problem, like you have cancer, and I only spend 2 minutes with you in a doctor's advisory visit, my feedback may not be right. Okay. Startups are hard. So I will hesitate to say, you should definitely do this. You should definitely do that. What I will tell you is process. Let's talk about the process you should follow. Okay. Is number 1, identify what path lies ahead of you in terms of your inflection points, your product, sales, marketing, business development, and intellectual property. What do you need to accomplish moving forward in the future to continue to grow your business? Once you understand what those inflection points are, you need to do the bottoms up detail of how much time and how much money each inflection point is going to cost you to achieve. You put that into a financial model. You run the financial model, and it's got to be bottoms up, low level detail with very reasonably accurate estimate and costs. Okay. If you look at this financial model and say, we're not going to be able to hit these inflection points at the time frame that we want, then you're going to have to get outside funding. That should determine your journey versus just, oh, I'm going to just pontificate after you've given me 60 seconds of the description of your company and tell you something that may have a dramatically different impact on you. I think I would be doing you a disservice. I say, definitely go out right now, drop everything, raise $5 million. Okay, how do I know? I don't. And anybody who does that for you, they don't know either. Okay, but if you follow the process, then you will know. We'd be happy to help you to follow the process. You can either sign up for a group coaching or one of our individual coaching sessions, and then we can actually have more time to understand the situation you're in to avoid giving you bad feedback.
Thanks so much, Derek. That's a really nice answer. I'll definitely follow up on your courses. Thanks.
Great.
Hi, this is Chino. Can I ask a quick question?
Yeah.
What?
I have an app idea and I did some research. There's another existing company that has the same exact idea that I have, same exact business model to a T. And they already exist. They're already making money. And I don't know how to separate myself from them besides the name. I have a more generic name. They have a good name too, but mine's a little bit more descriptive, in my opinion, at least. But they have the same exact, they're doing the same exact thing I want to do. And I guess my question is, I don't know how to separate myself from them. I don't know how to differentiate my idea from what they're already doing. Okay,
got it. So you're not necessarily in a bad spot just because someone else is there. In fact, I've seen a lot of founders when asked by a investor, who else, who are the other competition in your space? And they'll say, no one, okay? That's usually met with a lot of skepticism. If you're the only one solving the problem, then does the problem really exist? Okay. So just because someone's out there doesn't mean it's necessarily bad. In fact, if you remember, a decade ago or more than a decade ago, my kids were into MySpace. Okay. Facebook crushed MySpace. Okay. And then of course there was Friendster and all the other stuff. So it doesn't necessarily, it's not necessarily bad that you are not first. What I would point you to is that in my book, I have a chapter on product management, making sure you understand how to be able to do it. But then two, I have another chapter on it's the art of war. Okay. This is the competition chapter. All right. And we talk about how to be able to identify your differentiators between you and the competition. And ultimately, I think a big part of the success of what you or any other company does is going to depend on how well you execute. So if you remember this slide, execution is everything. Okay. In fact, that I didn't put the slide in here, but there's another slide I have in another presentation that says, Bill Gross, the chairman of Idea Labs, did some semi-structured research on what made companies succeed. He researched 200 companies, and his conclusion was the number one consideration was timing. Okay, whether you're releasing your product at the right time in the market. Okay, that's great, but most founders do not have the ability to control timing. Okay, the founders of Zoom did not have the ability to predict that there would be a pandemic in 2020, which would make their usage explode. All right. But the second consideration in Bill Gross's research was team and execution. The execution is what you can control. Okay. It is an undervalued process, which is why my training is all about execution, doing things the right way. Because honestly, I've seen great companies fail because of poor execution. I've been a part of some of them. Startup number 2, fantastic product. We failed miserably. Okay. Then I've seen very mediocre companies succeed because they just happen to do the right things at the right time. Okay. They executed well. Okay. So I would say for you, focus on, for the differentiator on the competition stuff. You can look at the chapter in my book. I think I've got a blog post as well on that, and I can help. A lot of what I do when I do individual one-on-one coaching or group coaching is help people to segment the market, okay, and identify differentiators. So, one of the things I've helped multiple companies do is set up their competition slide and figure out what are their key things that would potentially make them more successful than someone else. Okay.
And one last thing, the competitor I have, he's B2C. I was thinking one way to differentiate myself was be B2B, having my target market be more entrepreneurs and businesses as opposed to just the general public. Do you have an opinion on that?
Not enough information to decide. Okay. There are advantages and disadvantages of both. I don't know anything about your company, so I can only give generic info. B2C, it's a lot more difficult to be able to market. You depend a lot more on virality, et cetera, and hopefully it's something that you can acquire customers without having a large sales team. B2B, typically you are doing more building more sales team, internal sales or field sales, whatever the case may be. So the way you market and sell is going to be different. I'm not going to say one is better than the other because there are obviously successful companies in both.
Thank you.
We've had, I think Ladan had her hand up first.
Yes, thank you, Derek. I was wondering, this was an excellent presentation. Thank you for putting it together. But I was wondering for the startups that they are somewhere in between and they don't know which services they need, or perhaps even one-to-one coach or group coach. Do you have any person that we can talk to initially to get us guided to the right service, if any?
Yeah, Derek, if you could just, I think we have your contact info, Ladan.
Okay.
We can follow up and, maybe Derek can give you you guys can have a quick conversation. Okay. This is the slide that came up earlier about our coaching offers. You can also just jump in on a group coaching session if you prefer. Okay.
Right. Thank you. Probably if I can get hold of one person, at least we can kind of get a better understanding. That's great. Thank you.
Okay. Got it.
Good. Prashant? Go ahead and you can go ahead and unmute.
Okay.
Can you hear me now?
Yes, we can hear you.
Yes.
Yeah. Sam, thank you very much for a nice presentation. Really appreciate your job. I do have the two concerns. One is that do you have any company set up in the UK? Because I live in England and then I wish myself to get attached with a UK company. Mm-hmm. And another thing that I do have a product in the mind, the technical feasibility, commercial feasibility is confirmed. Currently, it is under the collaboration with the university through the research and development, and it's going to be a tech product. So fundability needs to be a little bit of improve. Rest of the things that the expectation from the investor is going to be fine because we are solving the problem through this product. So is there any possibility to help, please?
So you had multiple questions. Do I have a presence in the UK? The answer is no. We do all of our coaching remotely. Okay. I'm based in California, so I guess there's usually an 8-hour time difference between us and the UK. Happy to help because we love helping founders, but we found that having a local presence is usually not that important. We were not going to, advise on local laws and things like that, like which type of company and tax issues in your specific jurisdiction. We're not going to talk about that, but in general, the principles that we have, I think, are most of it is fairly universal. Okay.
Oh, that's great. Yeah.
Okay.
That's great. So would it be possible to discuss with you from UK to California and then remain attached?
If I understand your question, is it possible to work together even though you're based in the UK? The answer is, I think, yes.
Okay.
We might ask you to work more US hours during those times, but that's very, very possible. Most of what our coaching is done remotely. Okay. So we point people to specific training content. You learn on your own, and then the coaching is where you apply the concepts. Okay.
I agree with you. And would it be possible to share your details to us so we can remain in communication with you all?
Yeah, that's fine.
Yeah.
You can connect with me on LinkedIn. Probably start with Derek is the thing. I get about 15 to 20 requests a week, and there's just no way for me to service it all. And most of them say, just give me half an hour to, of your time so they can pitch their idea. I can't even do that. Okay. If I gave 20 people a half hour of my time every week, I just have no time to do anything else.
No, when we are ready, then only we will communicate. When we are
Okay.
not ready, I will not communicate yet.
Okay. Yeah. I would say start off with talking with Derek. You can also connect with me directly on LinkedIn. Okay.
All right. Thank you very much. I appreciate you.
All right.
I think we have time for one more.
Yeah. Let's try to wrap this up in about 5 minutes here. Okay.
And I think that last one's going to go to Faith. Faith, go ahead.
Hi, thank you very much. Wow, I really enjoyed your presentation. I started last year trying to start my own business. I'm 62 years old, on disability, a grandparent raising grandchildren. And
you got your hands full.
Yes,
I
and
applaud you.
not enough income to take care of us all. So that's where I started looking at, okay, what can I pull from my resources that I know that I can still do, and driving. I still have a pristine driving record, no accidents, no tickets. And I looked at that and I went, okay, I know how to drive a sweeper truck, which can be something that could be a sustainable income for me. Also, it would create jobs. That's where I kind of got into the idea of starting a street sweeper business.
Okay.
Now, I was listening to everything that you were saying, and I already know. I don't know what I don't know. I need to know more. My background wasn't business, it was teaching and counseling, life coaching. So I'm brand new to the arena of business ownership, entrepreneurship, and all of that. There is so much I need to learn. And your presentation was excellent. I know this is something I need to invest in. My question, because I can't even identify what stage I'm in after listening to you. I thought, oh, I already got the idea. I already got the business plan. But after listening to you, it's like, wait, maybe I need to go back and restart this, because I was getting anxious about not getting funding and financing, but maybe I'm not ready for that. Yeah. So, because everybody keeps saying, well, generate some revenue. And it's like, you can't generate revenue with a street sweeping company if you don't have a street sweeping truck.
Yeah.
It's just not going to happen. Okay.
Yeah.
I mean, and my main target market is state, local, and federal government contracts, which means I can't take a broom and a dustpan and go to some of these jobs and say, okay, I can show you what I can do. I need the equipment, but I want to be in a position. I want to do what you said, follow the process so that I establish a strong foundation so the business will last and succeed.
Okay. Maybe what I can offer is make sure you download the Startup Execution Roadmap and Blueprint. That'll give you, I know this went fast and I apologize for that, but this is important, and there's a lot of stuff, a lot of detail that we want to share to help founders be successful. I would start with the roadmap, because that gives you the high level detail of what the journey will look like, as well as the blueprint, which gives you some low level information. Given what you've described, it's probably not going to be a traditional startup. It's just going to probably be a small business. There's nothing wrong with that. Okay. The challenge here is how do you validate your idea? Okay. I have no idea if your thought is going to be successful, because I do not know or understand the need. What I mentioned earlier with Zach and Venture Validator is that, we have a validation service. We specifically focus on B2C and B2B2C, because a big part of the validation process, if you remember, was the interviews. It's easier to get interviews with a B2C audience. your customer base is likely to be somebody in public works in a state or local government. Okay.
But it actually is a B2B2C, because we also offer our services for, we don't just do the street sweeping and parking lot cleanup. We also do junk removal, asphalt
Okay.
repair.
Okay.
So there's room there for direct client customer
Yeah.
relationship. So
Well-
I would, based on what you said, B2B2C, I see where I could fall in that category very easily.
Possibly.
The
I don't-
largest target market I'm looking at, because
Yeah.
I'm a minority.
Mhm.
Okay. That's part of the certifications I mentioned in my
Understand.
question way up
I
there.
get it.
Minority female, economically
Great.
disadvantaged area
Mhm,
in
mhm.
Southwest Atlanta.
Mhm.
That opens the door for set aside contracts.
Yes, that's true.
Okay. So I believe I have a viable, sound idea, but again, because I've never,
So,
with all the college, I've never done business, so I
right.
don't know what I'm doing. And I
So
don't
here's
wanna
what I
mess
would
it up.
suggest. Okay, from what I understand, I know nothing about street sweeping, but it sounds like you got to spend some money to get some equipment. Okay,
Yeah,
whether it's one of those vacuum trucks or whatever the type of
Exactly
thing
what
it
it
is.
is.
Okay, it's going to cost some money. So given what you described, I would be I would caution you that you don't overextend yourself. This is actually hard. I mean, if you were a millionaire and could just, write a check and whatever else, fine, go for it. Just dive in. But given what you've described about your situation, be careful of spending too much money too early.
I
One
already did that.
possibility,
I already learned. I'm learning from
Yeah.
that one. I already did that.
one possibility to deal with this issue is to potentially pre-sell. Okay. You have an idea that might be viable. What can you sell before you invest in the truck? Okay, let's say you would sell $1,000 contract to vacuum the parking lot in this business. All right, if that's what you would normally sell, can you get 5 businesses or some number of businesses discount the first 6 months of that contract instead of $1,000 a month? Charge 500 if they will sign up for you and give you some cash so you can put a down payment on your equipment. Okay. It's more work, but then it reduces your financial exposure. You are not going to make as much money during that first 6 months because you gave them a deal for pre-selling, but it would be a way for you to protect your resources and demonstrate that there is some interest before you wrote I don't know what those trucks cost, probably 50,000. I don't know.
Try 200.
Good. Okay.
But one of the things I thought about as far as that was concerned, fleet financing, and I can
Yeah.
work toward that by building some business credit by some trend lines.
Yeah.
If
Yeah,
I,
you
if I
could.
can build my trend line with the company, then I
Okay.
can put myself in a better position to actually get the assistance I need as far as financing for the truck.
Yeah.
Like I said,
Ulti-
there's a lot I need to learn though,
Yeah.
and I think I really want to do your training.
Yeah, so happy to help. My biggest concern, I don't want you to get overextended and find yourself in a bad spot. Okay, some people, I've run into multiple founders who've bankrupted themselves, and I'm like, no, you shouldn't have done that. You shouldn't have done that. Okay, I don't want to see
Right,
that
right.
happen to you.
I mean, I got myself in a little bit of hot water, but nothing, I'm not toward bankruptcy. So I'm,
Yeah.
that's why I'm kind of stepping back. Especially after watching you today, I feel like, okay, maybe I need to step back and come at this again and better prepare myself for doing this so that I actually will succeed at it.
Yeah. So I would generally say, given the large amount of cash, if there's some programs you can take advantage of, try to take advantage of them. I understand the set aside stuff. Startup number 4 was a minority owned, women owned business as well. So I get that, but you have to show some traction, and I don't want to see you over leverage yourself because it sounds like you have a lot of people who depend on you, and I don't want to see you in
Right.
distress. Okay.
Well, one of the things I love about my idea too is that it is a job creator. And the more customers, the more positions I would have, the more drivers I could hire.
Okay.
So
I hope it's successful. I'd say move cautiously. See if you can try to pre-sell. See if you can qualify for some set-asides or things like that before you put a lot of money in here. Because my initial sense is that this is potentially going to be hard to pull off. Okay. I'm cautious. I'm very concerned. But it's possible. It's not saying it's impossible. If you are able to execute, then you could create yourself a nice little niche. But I think it's going to be very hard.
Well, that's another thing, because there are not, when you look at the industry, there are not a lot of minority women in this industry, but that's exactly what the government is looking for. And that's what the set-asides are for.
Great.
And it's like filling a niche that isn't being filled.
I get it. I understand. So hopefully you can execute on that. Let's I've got to move on here.
Okay, thank you.
Okay. Good luck.
Thank you.
Awesome. Thank you so much. We ran 40 minutes over. So thank you for staying and spending your time with us. If you have any other questions, put my email in the chat, hello@fundablestartups.com.
Hey, can I ask a quick question? I was wondering if you give help for nonprofits. Like I was trying to do like a vegetarian vegan initiative. So it's like a nonprofit to increase awareness and education. So is there something in all your material or your coaching that help nonprofits?
We don't have anything in particular with the nonprofit industry. Most of the startups that we work with and small businesses are going to be for-profit initiatives. There's probably some generic feedback, which I don't think I can give generic business advice and stuff, but I don't know if there's a whole lot that's specific to nonprofit. In a previous career, I did work for a nonprofit for a year. It was a labor of love, and I understand how difficult it can be. So I have some thoughts and opinions, but it's probably a lot more detailed than we have time for right now.
Okay, cool. We can connect later then on LinkedIn or something.
Okay.
Thanks.
All right. Sorry, this went long, but hopefully it was helpful. I would encourage folks take advantage of our resources. Honestly, we put hundreds and hundreds of hours into creating this content, and we don't charge a whole lot for it. We have the luxury of having had a couple of exits. So we try to make it very affordable for most people. So hopefully you'll take advantage of it. All right. We'd love to be able to help where we can. There's only so many hours in the day though. Okay. Right. Thank you, everybody.
Hey, Sam, this is Ryan.
Okay.
Sam?
Yes.
Okay. Yeah, I just threw a link in there for Mehul, the Council of Nonprofits.org.
Oh, okay.
So that's a fantastic resource for getting finance, another setup that well, maybe of use to you, maybe of use to him.
Okay. Thank you.
All right. Y'all take care. Absolutely.
All right. Bye. Thanks, everybody. Good luck in building your own fundable company.
Thank you, and fantastic training, Sam. I appreciate it.
All right. Very good.
Thank you.
Have a good one, folks. Bye.
Remember that successful startup fundraising is not about the pitch. This video series walks founders through a 5-step process to raising startup funds. Continue your learning with great startup coaching and training at our fundablestartups.com website, or the playlist in the upper left provides access to all 6 videos in this series.